Hi, my name's Terry, and in this video I want to talk about consistency and why it matters more than time in the market. And this is an important mindset for anybody investing, especially after 50. So, first of all, I would just like to say these videos and all the information I give are my personal journey only, so not financial advice. And if you should want to do any investing, then I would strongly recommend you to seek your own personal financial advisor. And these videos are for entertainment only, and I hope like myself, you get some excitement from them and enjoy watching them and my journey from starting my ISA and as it progresses through the coming weeks and months and even years. So, many people keep waiting. This is common thoughts, and as you can see from the bullet points, lots of people think they'll start next year, they'll wait for a market crash so the prices are low, they'll invest when things calm down, they need more money first. Whole variety of reasons and far more than that. But often all these "I'll wait for so and so" means that years pass by very quickly and really you never take any action at all. So, my personal mindset, I believe that consistency matters far more than perfection. So, as I've said before, I'm not trying to perfectly predict markets, buy exactly the bottom of the market, become rich overnight. All I'm trying to do is simply invest and invest steadily and regularly, build patiently, and think long term. So I let the magic compounding element that's involved with an ISA take effect. And anybody investing, I would think, has to have the mindset they're expecting at least a minimum of 3 years, better 5 years, and then 10 years plus. That is sort of the time scale, and not to uh, think, oh, I'll start this and then I'll be rich in a few days or a few weeks or months. This is a long-term personal mindset of mine, and I think if you're thinking of investing, should be of yours. So why consistency helps? So regular investing really helps. It smooths out the ups and downs. So yes, the markets are going to boom sometimes and sometimes they're going to fall. But if you invest regularly, then sometimes you'll be buying when the markets are high and sometimes you'll be buying when the markets are low. So overall, it all evens out. So it reduces the emotional decisions. You just set up, in my case, I've set up a direct debit to my trading platform, and a certain amount of money goes in every month, regardless of where the markets are up or down. And then in between, if I want to invest extra amounts, I can do that as well. So building investing discipline, that's what it's all about. And if you set up, say, a direct debit, well, your discipline's already taken care of because it's done automatically in my case, once a month. And yeah, compounding happens over time. It just automatically takes effect. This magical compounding that I keep on about. And it is magical because at first it seems slow, but slowly as it compounds, it gets more and more effective. So even small amounts invested regularly can build surprisingly over the years. And that's right. So even if you're just thinking, well, I can't afford much, perhaps £10, £20 a month, that's better than nothing. And that will consistently add up and grow and compound, get your dividends. And again, this magical compounding really is magical, how it builds up from small amounts. So market drops don't scare me. Now, yes, you're going to be slightly alarmed if the market suddenly crashes. I mean, anybody naturally would be. But what you've got to understand is it's going to happen. Markets are going to go down just as much as they're going to go up. That's just the natural way markets work. So you've not got to be alarmed. You've just got to think this is part of the cycle. And yes, they've gone down, but they will go back up. In fact, if they go really down, the only way is up. But just watching the markets over the past whatever 100 years or so, prices and markets have gone down, and markets and prices have gone up. So this is just something you have to accept and don't get alarmed at. So yeah, when the markets fall, prices become cheaper. So it's actually an advantage because you can buy more stocks and shares for the same amount of money. Your dividends continue. They'll just keep coming in regardless. And long-term investors just keep buying. And that's where if you set up your direct debit or whatever, you're going to be buying when it drops at the cheaper prices. So yeah, I personally try to avoid panic, and anybody investing, I would advise them to do the same. So time in the market matters, yeah, and time in the market is more important than timing the market. So the longer you're in the market is far more important than trying to wait and guess when it's going to crash and be at the bottom. So start slowly, invest, what you can afford, and be prepared for doing it every month on a regular basis. And that amount of time that you're doing that will give you a better result than waiting 6, 12 months, 2 years, who knows, for when the markets are really low and saying, now I'll get in. You've lost all that time, and time is the most precious of assets. Time is something we can't replace. We all wish we'd have started doing this 20, 30, 40, 50 years ago. We can't replace that time. So it's a precious asset. So, use it and get in, however small. If you're going to invest after you sought financial advice, get in and get in. My personal thought, as soon as possible. But obviously, every individual is different. So, as I put in some bullet points there, compounding needs time, dividends need time, growth needs time. This is why time in the market is more important than time in the market. So, my ISA approach. Certainly, I'm trying to invest regularly, setting up a direct debit, reinvest dividends. On my platform, all my stocks and shares, I've ticked the automatically reinvest dividends because they'll compound, and then their little bits they get in dividends will compound, and it's just a snowball getting bigger and bigger and bigger. Stay calm, certainly stay calm. So don't panic, Mr. Mandarin. Ignore short-term noise. So don't worry about gossip. The market's going to crash next week, and then think, better sell everything. Ignore all that. Build steadily over the years. This is the secret. Build little and often is better than not at all. So one step at a time. So starting later doesn't mean giving up. It certainly doesn't. So even starting later in life, and I'm in my 70s now and only started, the end of February 2026, and we're now, as I record this, May 21st. Starting doesn't mean giving up. So consistency still matters, patience still matters, and investing still matters. So doing something rather than nothing is still important. And yeah, I believe it's still worth building something. It certainly is. It's better building something than thinking, I'm not going to do it because I should have done it a long time ago, or I'll wait for the market to get to a low point and then start. Just get in, stay in, and just build. And basically, if you just set up a direct debit, you've done all the work. Once you've selected your stocks and shares, it'll build automatically. Reinvest your dividends. It's all done for you. It's absolutely no work at all. The part I like is rather than just do it and forget about it, I like to be involved and get some excitement from seeing the dividends come in, the dividend being reinvested, the regular investments and how it grows. So yeah, let's make it not just something we do for investment, but something we do for a little bit of excitement as well. So my final thoughts, risk. There's always going to be risk. Life carries risks every day. So we're going to invest, we're going to accept some sort of risk. Personally, I believe steady, consistent investing gives me the best chance to improve my future financially over time. And I certainly do, because I've done lots of things, bound to have done it 70s years on this planet, done lots of things, but slow, consistent investing, I think, will win the race. So if you've enjoyed those videos, and I really hope you have, and I hope I portrayed a little bit of excitement in doing this ISA journey. I hope you'll follow the videos, and thank you for watching them. And if you do enjoy them, obviously please subscribe, like and follow me. And I really appreciate you watching the videos and your support. So I look forward to seeing you in the next video, and hopefully that'll be very soon. Thanks again.